What if I told you for the last 10 plus years when it comes to investing in sports cards, in collectibles, in stocks, in real estate, in NFTs that we have been completely babied? What would you say to that? Can we handle the truth?
You doctored the logbook. Did I, Captain? You coerced the doc.
Consider yourself in contempt.
Colonel Jessup, did you order the code red?
You don't have to answer that question.
I'll answer the question. You want answers? I think I'm entitled. You want answers? I want the truth! You can't handle the truth!
Stick around. Hello to all my sports card collectors, investors, all of my collectibles friends, all my personal finance people. How are we doing? How is everybody's day? It is Friday. We have made it to the end of the week. We have got to the weekend. I hope everyone has got some amazing plans. Fairly low-key weekend for me, just doing stuff around the house. Might do a little bit of hot tubbing, but other than that, it's going to be pretty low-key, making videos and hanging out. If you're new here, please hit that subscribe button. If you like what you hear, the like button. We have a fairly unique channel here where we are talking about sports cards, collectibles, but we're also tying in finance elements, macro, micro stuff that impacts cards. And we're also talking about just the ins and outs of sports cards as a whole. I love having you here and I enjoy it so much. So thanks very much for stopping by. Also, don't forget to connect with me on IG at The Personal Finance Dad. I'm also on the old Twitter machine, The Personal Finance Dad. All right, guys, what if the huge gains that we have seen in collectibles and equity stocks, real estate, NFTs, assets in general, what if it is a huge mirage? What if it's an illusion? What if? We're going to take a look at some stats, the parabolic gains that we have seen over time. Is it sustainable? I don't know. You don't know. None of us know, but we're going to talk about it. Let's first start with stocks, with equities. In 2009, when the stuff hit the fan during the subprime mortgage crisis, I was 28 years old. My wife at the time was 27. We were about to get married, and it was rough times in the United States. The real estate market pretty much collapsing, the financial markets collapsing. To give you an idea of where we were, the pre-recession high for the Dow Jones on October 9th, 2007 was $14,164.53. That's the Dow Jones. That's what it was. March 5th, 2009, it had fallen more than 50% to $6,594.44. Can you imagine that? Just to give you clarity, for those that don't watch the markets that often, the Dow Jones currently is in the 34 to 35,000 range. 34 to 35,000. That is such a monstrous difference from where it was in March of 2009. So what is that? 13 years ago. So what has happened? What has been going on since then? Well, the government, in reaction to this sort of event, what do they typically always do? They offer stimulus. And it doesn't matter if we're talking about George Bush, doesn't matter if we're talking about Barack Obama, doesn't matter if we're talking about Donald Trump, or if we are talking about Joe Biden. Stimulus, 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 and low, historically low interest rates. And that's what we've seen for the last 13 years. Have we seen growth in the U.S. as far as companies and innovations and all those things? Yes, we certainly have. But we have also seen artificially raised prices for all of this stuff. And it's because of rates staying so low, and it's given that boost to the stock market. What do you think the median home price is currently? It might actually shock you what it is. It's shocking. If you're someone in the middle class, lower to middle class, I don't really know how you're supposed to afford a home. The median home price currently is $408,000 in the United States. That is insanity. It's never been higher. It's never been higher than that. And you might be thinking like, oh, but what about, during 2006, 2007, leading up to the subprime mortgage crisis, housing was way up then too. Guys, the median home price in 2007, 2008 was about $250,000 to $260,000. And I remember thinking it was high back then. I remember thinking like, wow, the median home price is $250,000, $260,000. That is insane. Now it's $408,000. And so after the 2008-2009 financial crisis, because of the historically low rates in large part, you saw them creeping up. So you saw it creeping up to where it was at 250, in 2005, 2006, and then it was kind of creeping up there, to 320,000. I believe it was at 320,000 when the pandemic hit in March 2020. And then what happened? Stimulus hit. $3 trillion, roughly approximately $3 trillion was pumped into the economy like a rocket.
The word unblowupable is thrown around a lot these days, but I think I can say with confidence that... Okay, that shows you what could potentially happen.
Money just flooding the system. In March 2020, the Dow Jones actually took a pretty decent sized dip, dropping down to $23,687, but it did not last long. It rebounded hard with the promise of stimulus, and that is kind of the key factor that we've seen here. And then, of course, sports cards, collectibles, graded comic books, graded video games, graded sports cards have seen an absolutely monstrous rise over the last 2 years. So is it just that everything is going up miraculously? No. Big takeaway, though, that I think is really, really important for all of us, including myself, because my wife and I did feel the effects of the 2008-2009 financial crisis. We had job loss that we dealt with. My wife at the time had a pretty decent sized retirement account considering she was 27 at the time, and it dropped 60%. And when you're 25, 26, that's scary, and so we did feel that. I'm not old enough to feel the effects of the dot-com bubble when that burst in 2001, 2002. Pets.com, I didn't get caught up in that. I was 20 at the time when that dot-com bubble burst, so I didn't have money in the market at that time. Nothing serious anyway to where I really felt the effects. But the financial crisis of 2008, 2009 absolutely felt that one. But we haven't really felt much of anything outside of this past pandemic. Of course, we've all felt it, but the amount of stimulus, the reaction to it has been incredible. Have we been babied? Have we been babied through these trials that we have felt, to where we've kind of artificially propped up our economy, propped up pricing for a lot of these things. And I talk about this because I also feel like I need to check myself. When we look at sports cards, if you were buying sports cards in 2018, 19, 20, and then you're selling in 2021, 2022, you're ahead on a lot of this stuff. And you might be able to double your money, triple your money. You might be able to 10x. Crypto is kind of the same sort of deal. NFTs, it's the same sort of deal. You can 10x your money. But I think that we need to get back to a little bit more of reality of just being okay with smaller gains and understanding that, a lot of this stuff is so speculative. Web3, I'm really excited about all the metaverse stuff. I'm really, really excited about the potential of it. I do think that Web3 is a thing. I do think that cryptocurrency and NFTs are all going to have a big part of the future economy. I just don't know when that's going to happen, and I don't know which companies, which cryptos, which NFTs are the Google, and I don't know which ones are the Netscape.
Check this out.
Netscape?
Netscape Internet Service. You can get unlimited internet access for only $9.95 a month.
Well, what about all those other low-cost guys?
I don't know which ones those are yet, so that's what makes it really tricky. I've talked about this in other videos, but Warren Buffett has talked about the airlines. When commercial airline travel got really, really big, there was a couple hundred airline stocks to buy, believe it or not. And then finally, over time, whittled down. A lot of them went out of business. And now you have the major airlines today, the winners, and those are the valuable companies. And it's such, the speculation on all this stuff is massive. Now, of course, there will be big winners in this. There will be the people that, the equivalent of buying the Apple stock for $1 or the Amazon stock for $1. There will be those people. But I think that we also need to understand is, the Apples of the world went through a bunch of this. It hasn't just been this. Tesla as well. Tesla, a very valuable stock, has not always been a valuable stock. For a long time, it wasn't. Amazon, no different. Amazon lost money for a long time. Amazon stock has not been near as valuable, as it is now. That's a recent phenomenon. I make this video again because I want to check myself, make sure that I'm, being realistic about returns, gains in these things when I'm looking into different asset classes, whether it is sports cards or whether it is, collectibles of any type, whether it's equities, whether it's real estate, all that stuff. For me, and a big reason why I do like some of the alternative investments is because I don't get excited right now about real estate and equity stocks because it's at all-time highs. Real estate's at all-time highs. What's exciting about going and buying a property right now? For me, it's just not exciting. The supply chain issues, if I'm going to go build something, okay, so I'm going to go pay sky high prices for building materials. It's not exciting. Equities at 35,000. Yes, I'm putting money into it. Am I excited about it though? Not really, because it's so damn high. It's at all-time highs. It's the same reason why people weren't buying, LeBron James RPAs, 6 months ago. They were at all, when the thing hits $1 million, how exciting is it to get in on that but for me personally, I just want to be sitting in that, that 5 to 7% a year. If something gives me 10, if something gives me 15% on the collectible side a year, amazing. That's amazing. But I think expectations are really critical. Our expectations as a culture, I think in the US right now are just they're through the roof. There's always some fun in the speculating, the sports betting, the gambling, the day trading, part of investing, kind of those short-term flips. But in reality, long-term investing is real investing. That's when you're really invested in something. And so for me personally, I'm just going to kind of focus on stuff that I believe in, but I'm okay taking those smaller gains. I talk about it on this channel. I'm just trying to get small bumps along the way. I don't necessarily need to, quadruple my money overnight or in 5 years or whatever it is. I just want to kind of build on something, build an awesome collection, build an awesome portfolio, and then just gains traction over time. There's no secret to this. There's no get rich quick. It all takes time. It's all built over time. Let me know your thoughts in the comments below. What is your game plan here? And we're talking about traditional investments. We're talking about collectibles and alternative investments. Have you thought about a game plan? Have you put it in place? What are your thoughts on this? I'd like to hear what viewership thinks on this particular subject. Guys, have an amazing rest of your day. Let's have an awesome weekend. Stay healthy, stay awesome. I will talk to you again later.